Welcome to ForexTV.com. Today's Thursday, June 18th. I'm Tim Kelly with the New York Forex Market Buzz. Dollar is gaining against the yen and British pound and weaker against the euro and Australian dollar at mid-session. The Dow and S&P 500 are up on the day on positive economic data. Crude oil futures are little changed and gold is down marginally. Let's take a look at the stories that are making headlines for today. On Thursday morning, the Conference Board released its report on leading economic indicators in the month of May, showing that its leading indicators index increased by a little more than economists had been anticipating. The report showed that the leading indicators index rose 1.2% in May, following an upwardly revised 1.1% increase in April. Economists had expected the index to rise by 1%, matching the increase originally reported for the previous month. While activity in the Mid-Atlantic region's manufacturing sector has continued to contract in the month of June, the Federal Reserve Bank of Philadelphia released a report on Thursday showing that the pace of contraction has slowed by much more than economists had been expecting. The Philly Fed said its index of activity in the manufacturing sector rose to a negative 2.2 in June from a negative 22.6 in May, although a negative reading still indicates contraction. Economists had been expecting a much more modest increase to a reading of negative 17. First-time claims for unemployment benefits showed a modest increase in the month in the week ending June 13th, that according to the Labor Department, although the report also showed a decrease in continuing claims. The report showed that initial jobless claims rose to 608,000 from the previous week's figure of 605,000. Economists had expected jobless claims to edge up to 604,000 from the 601,000 originally reported for the previous week, while weekly claims remained above the 600,000 level for the 20th consecutive week. Analysts have pointed out that the pace of layoffs appears to have stabilized. Over in the UK, retail sales unexpectedly declined in May on falling clothing and footwear sales. That, according to the official data, a report from the Office for National Statistics showed the retail sales volume decreased 0.6%, while economists were looking for a 0.3% rise. This is the first decline in 3 months. Textiles, clothing, and footwear stores dropped 1.9% during May. Today we're joined by Jim Hyerczyk from the Pattern, Price, and Time Report. Jim, welcome to the program.
Hi, Tim. How are you?
I'm doing great today. Hey, Jim, a lot of factors, it appears, well, there's a lot of data out today, but the markets are not exactly trading as you know, one might expect given the fundamentals. You know, some say it's in lockstep with the equities markets, and today, in fact, it seems to be trading euro, Aussie, and with the exception of sterling, seems to be trading along with the equities markets. Others feel it's just a sentiment and people just grasping at any comments or statements from officials. What's your take?
Well, I agree with your second answer. I think the market's reacting to the comments from the central banks, and they're pretty much discounting the numbers. The market seems to accept that we're on the way to a recovery, and I think now they're just asking for more solid evidence, or maybe the mentality has shifted to more value-type trading. Let's face it, when the equity markets were beaten up and on their lows in March, just about everything was cheap. But as the market starts to rise, there's a tendency among the investors to sell out some of those rabbit stocks and then start to shop around for quality. And some of the price levels are at right now are a little bit too lofty. And so I think that usually means the market's going to roll over. The other thing in the equity markets is anybody that's had a good profit this quarter is more likely to be in a protective mode right now, or maybe take a little bit off the table. We haven't really seen the money manager who missed the boat and is being forced to jump in and chase the market. And then shifting into the currencies, back in early June, when we topped in the euro at 143.37, it was the same day that several markets made technical reversals, that is, higher highs and lower closes, on both the daily and the weekly basis. And those types of moves usually indicate the selling's greater than the buying. So I think at that point, the technical factors did take over the market because the fundamentals just weren't enough to attract new buying. And usually when this type of setup, you have a correction of at least 50% of the rally, and that would mean the euro's got to go to about 136 before we'll see any people stepping in because the price is attractive. So that's my take on it, that it's sentiment and they want stronger data, and they're just relying on chart patterns right now to find value zones.
Okay, Jim, the euro did fail at 140 today. You take that as a sign that your euro retracement has begun when theoretically, if you look at the trading over the past week or the earlier half of the week, the euro had been trading in correlation with the equities markets. It's not doing that today, certainly not as closely as it has in the past. You think this is a sign that euro is maybe getting a little tired here?
Yes, it is. If you look at the euro, following that first reversal top, there was a sharp break. Took the market down to about 138 or so. And then there was a quick 3-day rally which retraced that first leg down. I don't want to get too technical if you're not looking at a chart, but that's a typical topping pattern. As the first move down will clear out the weakest shorts, and then the next move up will attract, the weakest longs, and the next move up will attract the fresh buyers. So I think the sellers came in around 140, 177. Now that's the move that I think is going to drive it down to 136.10. And as far as like the equities, if you want to follow what the equities did, they didn't top until they topped basically the same time, but the trend in the S&P didn't turn down until Monday. So there's still one wicked retracement coming up in the S&P before the new sellers step in. What I've learned in the last year is traders have been reluctant to buy strength and sell weakness. Now they're looking at selling retracements, and it's been pretty reliable. And so looking back at the euro, stopping at 140.13 was expected because it's in a retracement zone, and now the next leg down should take it to about 136, 136.10.
Hey Jim, just looking at the numbers here, what do you think the horizon is on that? And is there, is this pure technical? You think there are any triggers other than that price level that would drive us down? And more importantly, what do you think the horizon is?
Well, I think that this June 24th Fed report is going to be very critical. After this date, there's no report until August. So they're going to listen to everything they have to say. The last time I was on your show was in April, and I said that they would start mentioning the exit strategies. And I still think now that the economy has shown some signs of recovery, that people are going to be listening for exit strategies. They're going to be listening to hear how they feel about an interest rate hike. Some say that yesterday's CPI has shifted the Fed's thinking from raising rates in September to maybe even early next year. So those types of things are on the horizon. And right now, there's, without any clarity in the marketplace, traders are again, driving these markets to these retracement areas where they're basically neutralizing it. They're not at the lows, they're not at the highs, and they're bringing them back to somewhere in the middle. And I think that's because they're unsure of what the Fed's going to do moving forward, and they're going to have 60 days in the summer to have to sit through really low trading and no direction from the Fed. So what I think right now is you're just getting a pause in some of the mentality, and you're going to just get a market settling in the ranges.
Okay. Hey Jim, I'm looking at sterling right now against dollar, and I see that pretty much in the past couple of days we've, on a technical level, on the candles, we've closed as a cross there. Do you think we've topped out there as well? We've had a double top reached earlier this week at the just looking at the numbers, 166.17, 165.90 area. Do you think that was the top there in sterling?
Well, what it looks like is you have to realize I look at really long-term charts, and what we're doing here is if you have to go back to last September 23rd's high down to the recent lows in January, and that's created a range on the bigger charts. And what we've basically done is just created a Fibonacci retracement back to 166.94. So we know why the zone is there. We can't confirm the top, actually, until you break through the 158.01. That would be a clean double, a double top. But right now, until you start to get lower tops and lower bottoms, you'd have to say the trend is up. So I'd have to say right now that there's, until you break 158, based on today's, what I'm looking at today, you'd have to consider it still in an uptrend. So the pound is completely different than, say, the euro or the Canadian dollar or the other markets.
Okay, well, looking at the retracement from the all-time or the high of last year, made in November, we're at the 32% retracement now. So you still think we've got legs up to the 50% here?
Yes, I do. I see that right now, and the only way I could change my mind is if it started to take out swing bottoms. And right now, like I said, the closest swing bottom is 158.01. And even if you look at today's low, the 158.01 to 166.21, 50% pullback of that's about 162.21, which is pretty much where we stopped today. And so it's in the mode. It's still in an up mode. It's holding the retracement points. I start to get a little nervous being long if we start to break under the 161 area, but the trend is not going to turn until 158 goes.
Okay. Hey, Jim, I think we'll leave it there. That's all we have time for today. Thanks so much for joining us. And don't be a stranger. It was a long time since you last came on with us, so always enjoy having you here. Thanks again.
Thanks, Tim.
This has been your New York Forex Market Buzz with Jim Hyerczyk of the Pattern, Price, and Time Report. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.